Hi, this is Dustin with Dustin's Dollars. Today I'm going to talk about Knightscope and about what acquisition I think would make sense for them to do. And I will explain the context for this in just a second. There's no imminent announcement. This is just a follow-up. I got reminded because Knightscope is holding their annual meeting of stockholders tomorrow, I think it is. Yeah, Thursday. And they mentioned this in their last Investor Day shareholder Q&A meeting, whatever you want to call it, that was a couple months ago. Knightscope CEO Bill Lee had mentioned that they might do some acquisitions. I think his particular words were they might get a little bit acquisitive. And so this is just me sort of giving my thoughts on that because I realized that I never got around to making this video from last time. Before I begin, let me remind you that I am not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in Knightscope, so this video should be for your entertainment purposes only because I could be wrong about everything I say in this video. You need to do your own research before making any investment decisions. So as I mentioned, they talk about this in their last Investor Day presentation, right? And so I'm just giving my thoughts on that to sort of maybe focus your own thoughts and get some discussion going. I would love to hear other folks' thoughts, down in the comments after. If anybody's on the chat, feel free to chat there or down in the comments after I've recorded and posted this video, if you're seeing it not live. But again, just to be totally transparent and clear, and if you're looking for something special, inside information, I don't have any. There's no inside information. There's been no announcement. This is just sort of my speculation thoughts on the subject. Oh, somebody is on the stream. Wakaza, hello, aloha. That you say aloha, hello. Glad to have you on here. That's great. So at the last shareholder meeting or Q&A, Bill Lee basically said, in a past role, he was the director of mergers and acquisitions. He says he bought 22 companies in 11 months. So he's done one or two, as they say. And the CFO has bought a lot of companies in her lifetime as well. And he sort of listed out a couple things that they might be looking for. And he said, well, could be a technology that's interesting, or a team that's interesting, or top line revenue growth opportunity in an adjacent market. I think those are roughly what he said. And I have my own sort of speculation what I think would really make sense. One other note that they said there is they said, that was part of the reason for them going public, because now that they're public, they actually are able to grant, he said something along the lines of like, it gives them the currency to be able to do some types of acquisitions when they choose. And Beef asked, what acquisition do you think would complement Knightscope? I'm going to get to that in just a second. Sorry, I'm just giving the full context here. And so they are at least thinking about using their company stock or at least he implied they were thinking about using the company stock, as their currency to be able to do an acquisition. So what do I think would make sense? What would complement Knightscope? I mean, the first and obvious one that they mentioned is if there was some adjacent market, they could acquire a company that had relationships in a bunch of, let's say security, security operations and many different customers, end clients, and they could, cross sell all their Knightscope robots to them. Like that would obviously make sense. That's pretty much a given. And especially if that company brings some other related product or service that Knightscope could also cross-sell to theirs and would strengthen their product offering. Like that makes sense. That's pretty true. That's generic. That's true for every business. What I think, specifically would make sense for Knightscope that's slightly less obvious, and why I think I have something to add to this conversation here, is sort of two categories, and they are related. And just to give you a little bit of sort of my bias here. In my day job, I am a software engineer, so I'm sort of thinking about things a little more from the technology perspective. But the first category I think would be a company, right? So they're based in Silicon Valley. There's a lot of companies out in Silicon Valley, a lot of startups, small teams that are trying to, nowadays tackle problems with machine learning. And I think in today's environment where things are getting, it's harder to raise money, right? Venture capital, from everything that I understand, has sort of dried up quite a bit. So a lot of companies that used to be able to, get a couple $1 million to get their idea and their business off the ground, to try to scale, if they're not showing signs of, massive growth, I think a lot of that funding that from venture capitalists has gotten a lot harder to get for companies that don't have strong traction. And those companies might have some great people there. And I know that one of the things that Bill Lee, that Knightscope has talked about a lot has been, we want to continually add capabilities to our robots, right? We want to use machine learning. And there was even the announcement, sorry, I don't have it up today. This is probably a shame on me for not having this available, but they made a press release quite a while ago that, let me see if I can pull it up real quick. I think I've got it, where they made a press release, this was a couple years ago, specifically for which model of GPU or which supplier for GPUs. I think it was NVIDIA. I can get it up right here. This was in March of 2021, where they made a press release that, hey, they are starting to define their 5th generation technology, and they said, hey, we've done some evaluation. We're going to pick NVIDIA chips, NVIDIA GPUs to put in our robots so that we can actually do some, execute some machine learning stuff right there on the robot. And so I think when you, sorry, I'm reading the chat. Well, Kaza says, a software engineer, really, I work in public safety / veteran, and the wife is in IT. Yeah. Yeah, I'm a software engineer in my day job, believe it or not. But so they made this press release that they picked these chips and they're going to put GPUs on the robots themselves. And so that really makes me think they are trying to put this, they're going to try to put more and more features on the robots, right? More and more capabilities so that these robots really can start to deliver more and more services and more, be better or do different things, let's say, than just a human security guard would be able to do. And so I think a team that they could get on the cheap, right, as sort of a failing startup, in Silicon Valley, this is going to happen. It happens all the time, right, where companies just doesn't get traction, but they might be able to pick up some machine learning practitioners, relatively cheap comparatively, if they were able to acquire a company. And that gives you sort of, I think, two non-obvious benefits, right? One non-obvious benefit is that you are getting a team of people, potentially not just one hire here and there. You could acquire a team of people that have already worked together, and you could sort of evaluate, do they operate well as a team? And that sort of shortcuts a lot of hiring, because I think at times, especially out in Silicon Valley, especially for the niche skill set of machine learning practitioners, that's sometimes a hard thing to get. And so they might be able to get this from a sort of a failing startup on the cheap. But another thing that they would get, another benefit of that, is you're getting people who are happy to work in a startup style environment, right? Because I think there's a difference between, in multiple ways, between, let's say, people who are working at a very large tech company, have sort of a cushy, let's say relatively cushy job, cushy salary and benefits, versus working at a startup where a lot of their job benefits come from both sort of stock in the company and looking at a lot of potential future growth for the company, and they're happy to take that risk, or they're at least willing to take that risk. And then also the ability to sort of drive their own path and have an outsized impact on a company. And that appeals to a lot of people who actually want to work in that startup environment. And I think that's easier for them to get by pulling from a startup rather than necessarily just hiring from the open market. Because in terms of like raw compensation, they're probably not going to be able to compete with top tech companies. Because I know a lot of, just throwing rough numbers out there for people to think about, like, I think good, just solid machine learning practitioners in the industry are probably looking at, I don't know, $500,000 of compensation or more. I've heard numbers. I am not a machine learning expert myself. I've dabbled in that stuff, but I don't have firsthand experience from this. So anyways, that's sort of the first category. The second category, and this one I was thinking about more recently, and I have this open in the other tab, is an acquisition that would really help them with the technology for the K7, right? Because they've had this project that they started years ago. From the outside, it doesn't look like it's actually made that much progress since the initial prototype. And I know that Bill, right? Bill Lee, the CEO, has prior experience at Ford in the automotive industry, and even from his prior startup, which I have yet to do a video about that. I need to do some more research about carbon motors. If you're curious, if anybody has ever looked at that, but I think he has some prior experience in the automotive industry. So I think that, but clearly there's some aspects of the K7 that they have not been able to execute on, and they are just not at that point. And I don't know, from the outside looking in, they have not given a whole lot of transparency in terms of exactly where that project is, why it seems like it's been stalled, right? What is the biggest problem there? And I'm sure part of it is just the company was resource constrained, so they had to focus on what drives revenue now. And this is where I'm saying, like, a company that had already been working on some sort of a product that was at all close to the K7, this would be some company who was working on self-driving cars or something else in the automotive industry. And I got this, I was really thinking about this more as I saw that they had the Robot Roadshow in Detroit. And I'm sure Bill probably has quite a bit of connections in the city. And they also had some meetup, I think. Let me pull it up. I think that they had a meetup at some sort of a startup type event, if I recall correctly, in Detroit. They said it was, this is what I was thinking, at the Detroit Smart Parking Lab. And I did a little bit of looking at this, and it sounded like there might be some sort of other startups, and maybe it wasn't this, maybe it was something else that I read around what they were doing while they were in Detroit. But I think finding some team that has, was working on self-driving cars and maybe had failed, right? Because it's a very, very hard problem, might have a lot of relevant experience and might be a great hire, right? That's a team of people who've already been solving similar problems and have a lot of their own experience working on this, and to help Knightscope out to really jumpstart that K7 project. And so that's what I think, would make the most sense for them, especially now as they have both, some cash on the books in terms of, all the raises that they've done recently, and their ability to, actually issue stock in order to perform an acquisition, right, to compensate them directly in stock. So that is what I think would make the most sense. I know that there are a couple folks on the chat. I'd be curious to hear what you think. I think there's a lag time here, so I'll pause for a minute. But yeah, that's what I really think. And this, again, this is my speculation. Oh, here we go. This was the link. Sorry, I was things have been crazy in my personal life. Didn't get the full prep time for this video. This, I believe, was it, where they said, coming to the Robot Roadshow, coming to the Detroit Smart Parking Lab. It's an experiential event used to grab attention fast, forge direct connections with potential clients, and strike conversations in compelling fashion. It says a special meetup designed to bring together dynamic startups in the technology space with Michigan's automotive and mobility industry stakeholders to connect, share, and collaborate. Yeah, this was what I read. So this was the particular article that I was reading that references. Sorry, I probably should have made that larger for you to be able to read, where they're saying we're going to bring together, startups in the technology space with Michigan's automotive and mobility industry stakeholders. When I'm seeing this, I'm thinking, what kinds of startups are there in the automotive space? Like self-driving seems like one where a lot of companies are going to be taking a look at this, and there's going to be a lot of startups who tried it, and because it's such a difficult problem, just weren't resourced properly to do it as a smaller startup. But there certainly might be teams out there who could join Knightscope and help help out in a sort of a larger company. Knightscope isn't exactly the tiniest startup anymore, to be able to join and help push forward the K7 project. That's my general speculation at this point. Obviously, we'll have to just wait and see what happens. But I wanted to sort of share my thoughts. Again, it jogged my memory as I saw that we really had the shareholders meeting coming up tomorrow, and I hadn't gotten to talk about it yet. So there you go. Haven't seen anything on the chat yet. So while I'll give you just another minute before I hop off. I'll give the speech to anybody who is watching after the fact. I usually do these videos Um, usually do these videos Sunday through Thursday evenings when I can. I know we missed a lot of days recently in summer. Things get a little crazy in my personal life. So yeah, but I try to do this maybe sometime 9, 10, 11 p.m. Eastern US time, roughly. And so I'm always happy to have people hop on the live chat. There we go. Got some chat. Sorry, there is a delay here. So Beef asks, where do you see the stock price in a year? That is an excellent question. I don't really know. I'm sorry, but I think a lot of Knightscope right now is driven by the broader market. Right, they're falling down with a lot of tech stocks, and that's another thing that I wanted to sort of do an updated analysis on and say what are some other companies that I think are in similar situations. Right? I think it's hard to really do a good comparables analysis for Knightscope. You know, the closest publicly traded comparable is AITX, and there's just so much. There's some structural things about AITX that are make it hard to really call them. You know, they are in the same industry in terms of the products, in terms of the structure of their company. There's sort of apples and oranges in terms of the actual equity that is traded, that is publicly listed. So it's hard to compare those. I think, but I think as I look forward in a year, maybe a better way to answer this, another way to answer this is I think they do have some major upcoming catalysts that I'm looking for. And I have a prior video about this. Maybe I should redo it because it has been, you know, at least a quarter from this point, and some of this stuff has changed a little bit, although most of it's still valid. One of the really big ones is I'm looking for them really to get that FedRAMP approval and to see what happens with the federal government. I'm also looking just to see growth actually ramp up, right? We sort of saw the inklings of this in the most recent quarter. I think if we see them actually report growth, you know, in Q2, in Q3, and Q4, and they are now able to convincingly tell the story that, hey, we're now growing, we're now doubling year over year, right? We're no longer flat, because that was really the biggest thing. A lot of that I think just killed their total momentum is to say, hey, they were growing fast and then they just flatlined. And I think if they can get back to that growth, I think we're going to see them, like, it's hard to predict. And part of the reason why I think it's really hard to predict is because the liquidity on the stock generally seems to be low. And actually, that might change over the next year as, you know, because all the shares originally were in the hands of retail, right? Like pretty much everybody, I think, this is my speculation, is that pretty much everybody who invested in this, they weren't really big funds. They weren't really big institutions. They marketed to a lot of individuals. And so you had a lot of individuals who held the stock. And that really led to just low liquidity and low volatility, I think. And so I think there's a lot of potential upside if they will do that. Yeah, and sorry, I see you've gone past me in the chat, and I see I gave a long-winded answer. I can't really give you a number, right? Because I think there's a potential for the stock to really, personally, again, I don't want to lead anybody too much into an investment. I'm not trying to give financial advice, but I see a possibility that really the low liquidity and then low liquidity just meaning there's not that many people out there selling the shares. You look at how much is traded on a daily basis, and it's not that much. And if we see some major catalysts like them starting to get business with the federal government, and you start to see revenue ramping up, like the stock could go. You know, we saw what happened at the IPO. You could see some moves like that again. That's my speculation. So, sorry, that was a super long answer to your question, and not quite a specific answer, but I'm not a full analyst. All right, well, Kaza asks, what would make you invest more in Knightscope, Dustin? For me, if they gain DoD and Fed agency contracts. Yeah, I don't, personally, I have a fairly large portion of my personal net worth in Knightscope at the current moment. I don't know at this point if I would add more. I've been holding for a while, and it still is even going down to, you know, $3 a share is still a significant portion of my current net worth. So I don't know. I picked up just a couple shares when it was down in the fours. You know, I've, let's say, added like 1 or 2% of my position, not much at all. I mean, I think if they continued making, for me, it all comes down to, I'll be, to be totally transparent. Um, like I say, I already have a large position. I have really nothing, or there'd have to be a major change to make me sell what I already have. I think in terms of adding more, it would probably be if I see the growth really ramping up and the stock price not reflecting that. At that point, I would probably add more. If it's growing and they're close to a path of profitability where the risk level really comes way down. Because, like, no, make no mistake about it. Like, it's still very high risk at this point. And so I think if the level of risk comes down, meaning they get, um, you know, they're on a clear path to profitability, if they've been able to show revenue growth and they've shown that their margins are improving significantly, and they're able to keep their operating expenses sort of on a steadier path that's sublinear relative to the growth in the operating profit, or maybe that's the right term, the gross profit, I guess. Then, and I feel like the stock price really doesn't reflect that for whatever reason, I would probably add more at that point. If it gets, let's say, slightly more of a traditional, I'm not going to call it a value situation, but just like undervalued growth stock, right? Right now, I think it's hard to make the case that it's still, I think it's still in a price discovery mode. Let me maybe throw it out in that way to say that it's nobody knows what Knightscope is really worth right now because their margins are so bad. So you can't project anything, and we're waiting to really see, can they deliver the margins that they sort of show in their investor presentation, right? And just to make it more concrete, because I know I'm doing a lot of talking, if you look at the Knightscope's presentation, just real quick, this will only take a moment. Let's see. So I'll just read this while I'm trying to open up. Wakaza says, I'm at 469 per share, Dustin, closing on a 5K share soon. Wow, congratulations. That's great. And I want to see what they have in the books for debt versus earnings at the next earnings report. Yes. Yeah, absolutely. And right, I think as of right now, they don't have any, or they didn't have any debt at the end of Q1. I'd be surprised if they took any more on. They are going to burn down a lot of cash because they're not profitable. What I was getting at in talking about margins was, again, this sort of unit economics example, this slide where they say, hey, when we have our robots and our customers renew over a 5-year period, that robot, overall can give 57% gross margins. And they say that, but then you look at the 10 Qs and you see this and you're like, well, you say you can have 57% gross margins, but we look at it right now and you're at, negative gross margins. So what's the difference, right? And again, what I'm looking for there, as I mentioned in the past, is to see, as they scale up, as they have, more revenue, what do their margins start to look like, right? How do they actually scale? Are they getting closer to that? And obviously they're way far away from 57% when they're at negative something, probably like negative 57% right now. I don't recall exactly what this is, but that's, to me, if they start to actually improve that, but the stock price really doesn't reflect it, that's what I would be adding for. But yeah, you want to see what they have in the books for debt. I agree. If they start taking on debt, that's going to be a big, that's going to give me a lot of pause, and I would probably not be adding more if they're taking on debt. Again, unless they have some clear use for that's going to really allow them to grow even faster. But that really would only be if they're at a point where, hey, we're reaching profitability and we really just need to ramp up, let's say, production, right? Let's say our sales backlog, they're reaching profitability, but their sales backlog is growing even faster than they could meet demand, right? That might be a situation in which it's appropriate, or which I would be happy with them taking on debt to build a facility to, help them clear the backlog and meet even future demand. But again, that only, I think, makes sense when they really show a lot of, when they're able to show profitability and, significant ability to sell and demand in the market. So that's those are my thoughts. Sorry, I know that turned out to be some pretty long answers for you. I'll try to work on that and be a little bit quicker next time. So Wakaza says, I agree, Beef, and thank you, Dustin. So thank you both for hopping on the stream. I appreciate it. I am going to probably hop off now if there's nothing else. It's been 25 minutes already. I enjoyed it. Thank you both for hopping on. Thank you anybody else who is watching this after fact. I enjoy doing this. I hope you all enjoy watching it. So that looks like it. I know there's a lag time, and I'm sorry about that. I wish that there wasn't a lag time in the chat. I don't know if that's a setting that I can set somewhere. I'm not sure. I will make myself a note as soon as I hop off here to research that, although I suspect it's probably not anything I can change. So anyways, thank you very much for watching, everyone, and have a good one.